All right, we're back again, chapter number 4. Chapter 4 is completing the accounting cycle. Again, this is an overview of the objectives. There are 2 objectives in this particular chapter. The first objective is the worksheet. Now, the worksheet is an accountant's tool. It's not a financial statement. It is prepared at the end of the accounting period. And at the end of this discussion, I will show you where that fits in. The second objective is something called closing entries. Closing entries are prepared at the end of the financial period, just before the beginning of the next period. We have, when we look at our 5 categories of accounts, assets, liabilities, revenues, expenses, and equity. And normally we've had it in the sequence, assets, liabilities, equity, revenues, and expenses, which it probably should be in that sequence. Those 5 categories of accounts, some of those accounts are going to be permanent accounts and some of them are going to be temporary accounts. The concept of temporary accounts are that at the end of the accounting period, we close those out to start the next period with a 0 balance. Temporary accounts are revenues and expenses, the withdrawal account, and a new account we're going to have called income summary. Income summary is an account that will only be used in the closing process. Permanent accounts are assets, liabilities, and the capital account. Now, why are they permanent accounts? It's because at the end of the period, if you've got money in your bank account, it doesn't disappear, it stays there. It rolls over to the next period. Same as to your accounts payable, your liabilities. You come down to the end of the period, we would wish they would disappear, but they don't. They roll over as well. And so those are permanent accounts, and the balances of them roll from one period to the next period. But revenues and expenses, we close them out because we only want to keep track of the revenues for one period, of which we match against the expenses of that period. And then we take those balances and we close them out to 0, and we ultimately move that information into the capital account. And we start next period with 0 balances in the temporary accounts. Now, over here on the board, what I have is a sequence of the closing entries. We will close out revenues first. And if you think of this, revenues have what type of balance? They have a credit balance. Therefore, to get it down to a 0, we will debit revenues and we will credit this new account called income summary. Then we will close out expenses. Now, expenses have a debit balance. So to close out an account with a debit balance, you've got to credit it. But what is debited? Well, that new account income summary is debited. So debit income summary, credit the expenses. Well, the third thing we're going to do is close out income summary. Income summary has in it the revenues as credits and the expenses as debit in income summary. So it has a balance. And the balance in income summary is the difference between revenues and expenses. So that's net income. What do we do with that net income? We close it out to the capital account. And the last account that we're going to close out are the withdrawals account. Now, withdrawals have a debit balance. So to close it out, we credit the withdrawals and we debit the capital account. Now, income summary is a temporary account, and it is sometimes categorized in the equity area, but its categorization isn't important because income summary doesn't go on any financial statements. It is used only in the closing process. Now, that first objective we have was the worksheet. And we have looked at this before, where we have the journal entries, we have the ledger, the trial balance, the adjusting entries. We had right here the ledger, and I've erased that. And we had the adjusted trial balance, and then the financial statements. And then we went on to the closing entries, the ledger, and the post-closing trial balance. The closing entries are right here after you prepare your financial statements. You close out the revenues and the expenses and the withdrawal account. And anytime you make a journal entry, you post those to the ledger, and then you prepare the post-closing trial balance. Question: what type of balances will you have in the post-closing trial balance? Well, let's think about this. The closing entries closed out the temporary accounts, which were the revenues and the expenses in the withdrawal account. So your post-closing trial balance will only have permanent accounts. So we'll only have your assets, your liabilities, and your updated capital balance. The first objective we happen to have was the worksheet. What is a worksheet? Again, it's not a financial statement. What is going to be listed on the worksheet is the trial balance. It will list out your adjusting entries, it will list the adjusted trial balance, and it will help you prepare the financial statement. The worksheet is an accountant's tool used at the end of the period to prepare the financial statements. We have one that we're going to do here in class, and then that is the extent. We have one homework that you will be doing. Our focus is going to be more on the closing entries. So that happens to be chapter number 4.